So psychologically, that is a major hurdle to get back above. And you can even see over here how we held it, and then finally it gave way. So on the reverse side, now we're underneath, we're hammering from the bottom side. So for me, this to me is like probably the biggest level in the Bitcoin chart from high to low in terms of can we get above it or do we fail and start to trend back down? So that smart traders don't do that, right? Here's your first support at 25,000. It comes down here, I take a little off the table. Comes down to this next level, I take a little off the table. I probably even go long for a quick bounce. So again, it's traders, when you have the charts to your side and you do the same thing, you just play the levels. You're neither a bull nor a bear. You're just trading back and forth, and it's honestly very freeing because when you don't have a long-term bias, you end up making more money in the short.
With a gain of about 70%, Bitcoin ended its best quarter since March 2021, when it surged by nearly 103%, according to data from Bloomberg. That is significantly higher than the S&P 500 year-to-date gain of 5.5%, the Nasdaq 100's increase of 19%, and the iShares 20-plus year, making it the best-performing asset class by a significant margin. This growth is likely due to the banking crisis that exploded in March, taking thousands of people to do bank runs and try to put their money into a safe place. But despite the crypto winter being over and Bitcoin being the best-performing asset of the year, some experts still believe this may not be the bull run we all have been waiting for. In this video, Gareth Soloway, a master trader with 20-plus years of experience and founder of InTheMoneyStocks.com and VerifiedInvestingCrypto.com, will do a new Bitcoin price prediction and analysis that will help you understand what's coming next and why it's probably something most retail investors in Bitcoin are not going to be happy with. To bring you more value, we added Gareth's conversation with CryptoFace, along with its analysis and perspective. So let's get started right away.
At least for me, what it comes down to is, number one, the 30K area is just like epic support between 25.5 and 30K 0.5. That's the low from the bull market when we had that big kind of dip in between the 65 and 69 highs. And so on a psychological point, that is your wall. That's your brick wall, your stone wall, whatever you want to call it. So this is the big test for me. I still don't believe that the low is in yet, but if we were to get above 30,500-ish and actually hold there for, let's say, a week or so, then I think at that point you got to start talking about Bitcoin low being the 15.7 level, and that could be in. I was short around the 25,000 level on a few different coins. When we had that dip below 20K on Bitcoin, did some covering and actually flipped it into some longs, rode that up, not all the way up here to this level, but I rode it up decently. And now the only two positions I have out there right now, I have a tiny position, a starter position short on Ethereum, and a starter position short on Bitcoin. So I'm basically going with the resistance is resistance until it's broken, right? So as of now, like, it's so interesting, right? You go on Twitter, everyone's, like the $1 million price target in 3 months, like, oh, it's a new bull market. And I'm like, it might be, but when you're slammed into a brick wall of resistance, I got to take the under here that it's going to pull back until it proves me wrong, right? So I think, for me, I'm a show me the money type guy where it's got to prove itself first.
And this is Gareth's analysis.
So basically what I was referring to is this area back here where you have the midpoint of that bull cycle in 2021. And look at all these lows here. So psychologically, that is a major hurdle to get back above. And you can even see over here how we held it, and then finally it gave way. So on the reverse side, now we're underneath, we're hammering from the bottom side. So for me, this to me is like probably the biggest level in the Bitcoin chart from high to low in terms of can we get above it or do we fail and start to trend back down? So that's why I say, like, for me at least, it's a small short position. Nothing crazy yet. I might add around 30,000, but if it breaks above, that's a different story, if it's able to hold above. But right now, this is like the epic level of resistance.
Yeah. As we said before, money is flowing into Bitcoin and Ethereum due to the banking crisis. So what do Gareth and Crypto Face have to say about this?
Yes, we've seen money flow going into Bitcoin and Ethereum predominantly, right? If you look at the charts on those two, they've made short-term higher highs, while, something like a Polygon or a Solana or an Avalanche, they haven't. So there's definitely this money flow that's being driven in because of the bank crisis.
Yeah.
The question is, if that continues to calm down, do we see any of that money being pulled out? Like, if you look at the Bitcoin dominance, right? Bitcoin dominance is massively up right now because it's the recipient of this money from the panic in the banks.
I believe that's how the cycle, how it always starts. So in every crypto plan, it starts with Bitcoin, and then people go from Bitcoin to Ethereum, then they go from Ethereum to shit coins, and then they go from shit coins to scam coins. You know what I'm saying? And all of which you can make money with. The latter you probably make the most. You know what I'm saying? But so yeah, I mean, it's Ripple went up what, like 50% in a week. I know they've been dying and waiting for something for a long time.
Like, so I'm short right here, right? And the kicker is this: is like, am I going to hold it to new lows? No. Like, smart traders don't do that, right? Here's your first support at 25,000. It comes down here, I take a little off the table. Comes down to this next level, I take a little off the table. I probably even go long for a quick bounce. So again, it's traders, when you have the charts to your side, and you do the same thing, you just play the levels. You're neither a bull nor a bear. You're just trading back and forth, and it's honestly very freeing, because when you don't have a long-term bias, you end up making more money in the short term. I mean, that's really the essence of it. As much as I've been saying it would go down from that high level of 69, like, I'm ultimately a long-term bull. It's just I've been around the block enough, and I've got scars to prove it, that things just don't go straight up, right? I mean, that's just not the way human psychology works within the markets. So you might as well take advantage of it, right?
What about Cardano?
I looked at Cardano. It's had a nice little pop here. It's actually coming into resistance. I have a resistance around 42 cents. So 42 cents. It's got another penny and a half to go, but it's had a nice little push up, no doubt about that.
Let's take a look see here. Yeah, Ray, okay, that's a good little resistance line you can draw right there for sure.
And by talking about bank runs, did Gareth do one too?
Did you run on your bank a little bit, bro?
I did not, but again, I didn't have money at any of these regional banks, so I didn't feel compelled to like pull money out. In addition, where am I going to put it, right? Like, if I'm pulling it out of JPM or Bank of America, where am I putting it? I'm not going to put it under my mattress.
Show you a couple places. Why not? That's one of my favorite places.
That's all I need, bro.
Firm, baby. Like my mattress firm for the woman and the cash. You know what I'm saying?
Oh goodness, man. But yeah, I mean, so it's one of those tricky situations where it's, what do you do? Where do you go? If I mean, and that's why, that's why JP Morgan, it's too big to fail, right? They by the way, they were supposed to fix that back in 2009. They were
fix what? Too big to fail?
Right. It was like, all right, let's never let this happen again. Let's make these banks so they can fail, because it's not right to have, entities that can't fail, because then they can do all these things that they shouldn't do. And then here we are again.
Yeah.
And by the way, they're way bigger. They're way bigger than they were in 2009.
This was a fun interview for sure. Gareth also asked Crypto Face if he was diversifying his portfolio, and this was his answer.
I'm a big believer in, as cliche as it sounds, diversifying, especially with a unknown future. And I am invested with gold.
Nice.
Like I'll do silver to like give away to friends and family, friends of family and stuff. But gold, I actually hate even admitting it. What I really want to say is no. I don't have any gold. I don't invest in any gold, and yeah. But
don't be ashamed to admit you're a diversified investor. That's a good thing.
And by talking about gold and diversification, this is their analysis of this asset.
Saying this for years now, 3 years, that I think the gold, it'd be impossible for gold to break over 2,000 and stay there, basically have 2,000 form of support, unless some big time banks went down. And the reason for that was, three banks, top 3 banks really, 3 banks own, it was 70 or 80% of the sell side paper, and probably the buy side too, And basically, and this was data from years ago, but I don't imagine really changed much. Just the point was there isn't enough money to even buy it out if they wanted to. The people to buy out the price of gold. When there was lines all throughout the world twice. There was 2 times where we had 2 events in the past 3 or 4 years where gold was sold out. Anywhere you go, online, jambullion.com, any pawn shop, wherever, you look at Asia, there was lines at the door, but the price of gold wouldn't go over 2,000. And so my theory was some stuff would have to hit the fan, and some of those banks would have to go down. Fast forward to today, if you are a gold bar, gold coin collector, tell me, what is the bank that you see on most of your favorite gold bars?
Credit Suisse.
Credit Suisse, baby. This Swiss cheese. And man, oh man, I know when with them having major issues, other banks were gold pushing to 2K. 2K hasn't broken it, but I think we're sniffing, bro. I think we're sniffing,
I do too.
And it's at maybe a triple top. You know, whatever. You got this right here. I could have swore it was like this. Maybe that's Bitcoin I was thinking of, looking like this. But yeah, man, knocking on that 2K door, man.
Heck yeah, man. You know, I'm in agreement. I do think it's about to break out in a major way. And again, you know, it's still, if we do see the crisis expand, which it's hard to believe that it wouldn't, right? I mean, you have all this paper that was printed, and it's all at like 0.5% interest, 2%, 1%, whatever it is. I mean, it's all garbage at this point. I mean, and how does that not spread? And these banks are sitting on hundreds of billions of dollars in losses that are paper losses. They don't actually have to report them because they're paper losses,
right?
But I mean, it's and to me, it's going to create a chain reaction, right? So then the banks stop lending as much, which then creates the economy to slow even more. In fact, doing what the Fed kind of wants, although my guess is it'll overdo it. And then we get into a recession. We're in a recession. Inflation remains relatively elevated. And then it's a party from there on out.
Did you take value out of this video? Please leave a like and subscribe for more, and let us know in the comments below if you are diversifying your portfolio or going all in into Bitcoin. Thank you for watching. See you tomorrow for more daily crypto.